Hello folks, so there's gonna be a short video so that it wouldn't be data consuming for you guys, and it's gonna be a recap on what we learned yesterday on liquidity. And as I said, if you're going to trade liquidity without factoring in market structure, then the best environment to trade liquidity is in a ranging market or in a consolidating market, or in a market where we don't have a clear direction. Then you can trade based on liquidity alone without factoring market structure. And yesterday we learned that liquidity rests above old highs and old lows, and swing highs, swing lows. Okay, if you don't know how to determine swing highs and swing lows, you can put on this indicator, the fractal indicator. At least you get to know where swing highs and swing lows are. Okay, you have a swing high, you have a swing low, and then you want to be looking for the obvious swing highs and swing lows, because that's where the big monies are resting. And we know that institutions would always clear liquidity, retail liquidity, those who are trying to sell from resistance. For instance, you have this resistance, price comes into it and sell for the first time. Retailers will start looking at this level as a very strong level they want to sell from. Price comes, they sell, put their stop losses above it. Institutions take them out and then they sell off. So that's why you will see price go above a high and then sell off, like in this case. Then it goes below a low and it gives a reaction up. Okay, so we always anticipate a liquidity run for bigger price moves. So whenever you are anticipating a bigger price move, you should anticipate some sort of a run on a swing high. Okay, we are going to learn how to do it, or add it into or add it as a confluence when trading with a trend. Okay, but this, what I'm teaching, what we learned yesterday, was basically on liquidity alone, just trading based on liquidity without structure, without anything. All you are waiting for is a liquidity to be run, then you look for confirmation to enter. And I said the best time frames for you to be looking for liquidity is the daily time frame, the lowest 4 hour, and the weekly also have very strong reactions. So if you're going to trade just based on liquidity, you should look for these swing highs, swing lows, equal highs, equal lows, relative equal highs and lows, as we discussed yesterday. You should look it on a higher time frame. Somebody will say the daily time frame takes a long time to move. It may take 3, 4, 5 days for price to get to my level. But remember, we have a lot of indices, about a lot of them, from jump to crash, boom, a lot of indices. So you can mark all swing highs, swing lows, equal highs, equal lows on all these. You just need to check your chart every 4 hours to see whether we've swept any important liquidity point, and then you look for confirmation entries. As simple as that. At least every 2 days you will get a very nice strong move, a very big one, and you will be good for the rest of the week. So let's see how we can take confirmation entries. I'm gonna use this as an example. So this is a swing high, right? Very nice swing high. Retail will start looking at that level as resistance. Okay, so as you can see, price come into that level, it gives this rejection. Retailers will start towards selling. As soon as this dark candle close, they'll put stop loss here, and then this candle will give them a little profit. They are happy, they think the trade will go to hell, and then boom, institutions come and manipulate them, and then they take them out. So as that happens, let's go to the lower time frame to see how we could enter. And as I said, if you're looking at liquidity on the daily time frame, you want to be looking for 1 hour confirmation entries, although you can also take 15 minutes confirmation entries to be in a trade quite earlier. So we are going to look at the 15 minutes and the 1 hour as well. Okay, So take note of that level. Let's first of all go to the 15 minutes. Let me mark the whole area. Okay, and then let's go to the 15 minutes. We also check 1 minute, 1 hour as well. Okay, so looking at the 15 minutes, now let me get rid of the boss. Looking at the 15 minutes, we swept the liquidity right here. Okay, and as I said, as soon as you see the liquidity being swept, you want to start looking for what? Confirmation entry. And the confirmation entry will be a break of structure for the first time and the second time. Okay, so you can see that when the liquidity was swept, we broke structure for the first time here, but we didn't break structure for the second time, so no trade for us. And then what we can see is that we swept more liquidity here. Okay, and then this time around we break structure 1, and then we break structure twice, right? 1 break, 2nd break. So as we see this, then we can look for a fair value gap or an order block or a breaker block. We're going to look at these levels later on, probably in our next lesson. So what I can see here is it's an order block. I'll see these candles as my order block, right? We will discuss order block and you get to understand an order block. Sorry, a breaker block here. So I see this that wick, that rejection candle. I see it as my breaker block. That could have been an entry model, and then another entry model could have been from this fair value gap. Okay, let me mark it with lines. You see this candle's low. Okay, and then this candle's high. That little gap is a fair value gap. You are going to learn that, don't worry. That could have also been an entry. Okay, and we also have one fair value gap here, but price didn't come into it because it was weak, so weak that I couldn't get there. Just use this fair value gap coupled with this breaker block. Okay, this breaker block, and then if you take this entry, you know where your stop loss should be above the high. Okay, the safest. And then your take profit levels, you can look for liquidity at the opposing side. Okay, you look for equal lows or relative equal lows and swing lows. There's a swing low, that's a TP point, and then this swing low is a take profit point. So you can see if you're able to capture just one move in the week and take all this profit, you will be amazing. You will see how great your account will grow. But I know that we are very impatient. We want to be trading every day, every hour, every minute. So we are impatient. We don't want to wait for such beautiful setups on the daily, on the weekly, or the 4 hour. We want to be on the 5 minutes using indicators, scalping. Market will be slapping us here and there. But if you're going to be patient and work with this, trust me, this will give you a lot of profit. So this was the 15 minutes confirmation entry with a nice run. Okay, with a nice run. Beautiful. So remember, the rule is you wait for 2 market structure break. We break for the first time, we pull back, and then we break for the second time. Then you start to look for what? Breaker blocks, fair value gaps, order blocks, and that will be your entry. Your stop loss is always above the high, and then your TP is opposing liquidity. On the left side, it's good to take. You can even leave some all the way to these gaps that we have here. We have some little gaps inside that range. We also have some gaps around this range. If I extend it, I don't know if we came into it. Okay, it didn't come into it. So that this would have been a beautiful trade. So let me get rid of all these lines, and then we also check how we could have had an entry on the 1 hour. Okay, and I think the 1 hour gave the best reaction, the strongest, though the 15 minutes gave us something very nice. But let's also check the 1 hour. So going back to the same level, that's it. And then on the 1 hour, we are looking for the same thing, 2 shifts, right? So as we cleared the liquidity above the high, we also cleared liquidity on the 1 hour here. Okay, that's a swing high. And then we break structure right here. Okay, that's a swing low. We break structure there. We pull back to this fair value gap, and then it sells. But this is not where we are going to sell, because this can sometimes, after breaking structure for the first time, it can still go ahead and break structure again and continue going up. So we want a better confirmation. So first break, we wait for what? A second break. And then this will be your second break when we break below this level. Okay. But then, though you are not going to take the first entry, but it's good to mark the levels that price is respecting. At least it will give you a clue of how you are going to also enter on your entry. So you could have entered here, though you are not going to enter there, but if you want to enter, it would have been from this fair value gap or the big other block that you see there. Both are good entries. This big candle, that's your other block. Both are good areas to take your entry. So this is how to take an entry after you have confirmation. But mind you, as I said, that's not where we are going to take the entry. Okay, we are only going to take the entry after our second shift, and we had our second shift right here. Okay, we broke this low, swing low, with this strong candle. And then where can we enter? We have an order block here, and you can see that this candle just came into it. It wicked into our order block, this indecision candle, and then now we start towards sell off, and then we sold off. And you can see that on the 1 hour you are taking entry in this order block. Your stop loss above this high. Profit target, you look for swing lows. This is a swing low. It's a good profit target, and you can see how we react whenever we take a swing low, because there's liquidity there. So that's important. It's important for you to take profit around such zones. Logical take profit levels, logical stop loss levels, very important. We bag some profits here. We can put our entry, our stop loss to break even, and then we can bag some more profits at this swing low. Okay, very beautiful. And this would have been a beautiful trade. And remember, this is on the 1 hour, so this move is crazy. A lot of money out of this. Nice entry, nice stop loss, nice TP points. Okay, so don't be greedy. Whenever we hit a swing low, you take something off. Whenever we hit a swing low, you take something off. That's how you take profit, and then you start moving your stop loss down. Okay, very good. So there's one example. Let me give you the last example. I don't want this video to be long. Let me clear this, and we are done with that. Okay, so let's look at this one. We took this swing low. As soon as we price does that, you want to be going to 15 minutes or 1 hour, depending on the type of trader you are. So let's look at the 15 minutes first. Let me bust out that area so that it will be easier to identify. So going to the 15 minute. Okay, good. So that's the level. Let me clear it. So we took the swing low. Let's see here on the left side. Okay, so after taking the swing low, we are looking for what? Market structure shift. So remember, we need 2 shifts. So after taking the swing low, we again took a swing low on the 15 minutes. Price will always do that. We again took a swing low on the 15 minutes. Okay. And then followed by that, we broke market structure for the first time. Where is it? Good here. We broke market structure for the first time. And as I said, though the first break can give you a nice entry, but we don't want to be taking our entry from the first break. And as you can see, if you took your entry from the first break, you would have been stopped out, because probably you may take entry from this other block, right? And then where will be your stop loss? Your stop loss will be below it. If you are too aggressive and greedy, you put your stop loss just below, and you will be rigged out slightly here. Always put your stop loss a little bit below the low. Okay, it's the safest. But then this is not our entry. We want to have a second shift before we consider an entry. And then here we have the second shift. As soon as we get that, we start looking for fair value gaps or other blocks for entry. So in this case, we don't have any fair value gap around the area. And then the other block that we have is this candle, where price didn't come into it. So you wouldn't have had an entry. But then one entry criteria you can use as well is taking your Fibonacci, measuring from the low to the high. You can take one entry at the 50% retracement level, but then the best entry is at the 61.8 retracement level, and that's an OTE, optimum trade entry. Okay, a low risk entry, because it will get you closer to a place where you can place your stop loss. So you could have taken an entry from the fib, looking at price not having any fair value gap here, and the other block price failed to come to it. As we start rejecting like that and this candle closes, you can see that, okay, I think price is ready to move. If we trace 61%, I'm gonna get in, and then you're gonna, logical stop loss should always be at the swing low. Let me get rid of that. So you take entry 61% fib level somewhere here, and I'm going to show you something that you can use. It works all the time. Your stop loss would have been here. So this is the Fibonacci retracement entry. But then let me show you something real quick. Okay, when you have a confirmation entry and then you look into price and then you see that there is no fair value gap, there's something I want you to know, to watch. Look at the left side. Okay, look at the left side. Is there any fair value gap that price did not respect and then traded through? If yes, because ideally when we come to a fair value gap, we expect a reaction down so that the range will be balanced for us. If it just passes through, that fair value gap is never done. Price will recapitalize on it. Remember that. So yes, we don't have any fair value gap within this move, but we have a fair value gap right there that price did not respect at all. It just bought through it. And remember, price will come back and respect that fair value gap after we've broken market structure. So let me extend that, and then let me extend this as well. Okay, so that's your fair value gap on the left side, which price just bought through. Ideally, it should have given a sell opportunity, a short-term sell to make sure that range is balanced, but it didn't balance the range, just broke through. So it's not done. It will come back to actually balance it, and that's what we see here. Perfect entry. So when you have a shifting market structure, you don't have any fair value gap in the price. Check on the left side, you will find one, extend it and use it. So that would have been your entry right there from the fair value gap. Now take profit levels. Remember, your stop loss is always, it should always be logical. That's below your swing low. Okay, your TP, you can take partials at this swing high, because you can see that when you took it, we started to reverse. Another profit target at this swing high, we took that, we reversed a little. another profit target at the swing high. Okay, 3 profit targets, and we hit all of them. You could have had another profit target just here, that swing high as well, but we barely made it to that level because we've taken so much liquidity already and price wants to what? Drop. So let's see, this would have been a huge profit, right? Entry here, all the way here, and stop loss just here. Huge profit. So if you are going to use this strategy, it can be very profitable, but you have to be patient. I know you don't want to be waiting 2-3 days for a trade to form. You want to be scalping 5-15 minutes. You always get slapped, you lose money. But if you can be patient and wait for a liquidity sweep on the daily, and then wait to see whether price will confirm an entry for you, and then you get an entry, bam. It's a very profitable trade that can make you a lot of money. You can choose not to trade for the whole week and then continue the following week. And then if you are going to do mark up all your liquidity areas on the daily on all the indices and wait for confirmation, promise you every 2 days, every 3 days, you will get such quality trades to take and you'll be fine. So our next watch and take, if you don't understand anything, watch again, take notes. Our next lesson will be on order blocks, fair value gaps, and breakout blocks and all of that. So I'm out.